Just some waffle about this trade. I've just put a YouTube short up about this trade I'm currently in. It went 74 points against my trade. So basically, I had it going up, and I had it to go down in value, and I would have made money going down shorting it. But it went up 74 points against me, against the trade. But because, see, this is it. If I put a YouTube short up with fancy charts going with some red and green candlesticks, it gets lots of views, eh? But because it's not, that's like ABC. That's the C part of day trading, the fancy charts, right? But it's not. It's the B part. It's the B part of AB. Day trading is pretty much ABC. Well, most things in life are ABC. It's like you buy a product, you sell a product, and the C is actually making money from it, right? Day trading is you buy a trade. Yeah? Well, you manage your risk. You buy a trade, and when you sell your trade, the profit is what you make from the trade, right? But the candlestick side of it, I'm just waffling out, yeah? Waffling. Yeah? What I do best. But the C side is the fancy green charts. Yeah? The most important bit is the first bit, which doesn't get many views. If I show it, look at the balance, the available, the margin, the equity, and the profit and loss. That's the most important part, because unless you've managed your risk there, if you buy a trade for that that A bit is not managing the risk with you, making sure there's enough available to absorb any loss in a trade if the trade goes against you, which mine is going against me at the moment, 74 points, right? So I stayed in the trade overnight. Yeah? So I've bought the. So effectively, I was in it anyway, but I bought the close, and I might sell the open depending on if it gaps up or down. If it gaps up again, it could go about 130 points, 140 points against me. But there's enough equity available for the trade to do that. But that's the part, because you'll see in my previous YouTube short about this trade I'm talking about now, is that there's no stop loss on it, right? And there's a reason why I don't have a stop loss on a trade. Yes, you always use a stop loss. Always use a stop loss, because it can plummet. But I'm in it if it plummets. I'm in it so I can make money if it plummets. If it goes, but I'm going to say that because I've made it sure that there's enough available, I don't really care what the trade does, because there's enough money, there's enough equity in the trade, there's enough available in the trade to absorb the trade going against me. Doesn't matter what it is. If you're my age, yeah, games aren't current games. Yeah. Back in the day, there used to be one game. It used to be a tennis game on a computer, and it goes. Doop, 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 doop. But if you think like that, the ball or the tennis, the little square dot, doop, like the tennis dot, yeah, going from side to side on the screen. That was the only game there was back in the day. I'm an old boss, aren't I? But that was the game. But the ball, the square, the tennis ball, could only go when it went here. It rebounded. When it went there, it rebounded. When it went there, it rebounded. It was within a certain set of parameters. It couldn't go off the page. It just went on the side and bounced off. But it bounced around the screen. Yeah? That's the stock market effectively. Yeah. Excuse the fake coffee. But that's the stock. That's not code either. That's the stock market. Like, you see a screen and you get half of the screen. You can see what the trader's done. You haven't got a clue what it's going to do over here. It can go up, down, or sideways, right? But you've got half of a screen showing you what the trader's done, and you base your prediction of what the trader's going to do next based on what it's done previously and where it is in that. It's a bit like the tennis ball. Where is the tennis ball? Tennis ball could be here. Tennis ball could be here. You've got to know where that is in the parameters of the screen as to what the trade is likely to do. And in an options trade, like now, this options trade. It was the third yesterday, it's the fourth today. That option trade the expiry date isn't until the 19th of this month. So that's what's that 19th? That's 16 days. So I could be in that trade for another 2 weeks. It's not code. Even though it's useless one. But the thing is because the trade is still about 16 days, which is 16 days is about 2.5 weeks, two and a half weeks, whatever it is. Yeah. I've either got a choice as to either accept the trade going against me, and it may go from 2. So I bought it at 154. Had it gone down to £1 or 100, I'd have made 50 points on that trade. But because it's gone 154 to 228, it could go to 300. But I've got enough in me available for it to go from 220 to 300. But at some point it's going to come down from 300 to 250 or 200 again. Yeah. At some point, because it's got 19 days to go. And if you buy, it's like a litre of fuel. You buy a litre of fuel, you know roughly in the UK it's about £1.42, £1.48 a gallon. A litre. But you know whatever they put on the fuel, or if they reduce the fuel, you know roughly what it is. It's around about 140-ish. You know when you go to the fuel station, you know approximately what it's going to cost you to fill your car, aren't you? Approximate. Doesn't matter what they do with the fuel price, you know it's going to be approximately, it might cost you another tenner or sort of whatever, yeah? But you've got an idea, haven't you? If you trade options, if you trade commodities or whatever it is you trade, or you buy and sell on the stock market, you should have an idea of where the trade goes. I don't see, if I buy the trade at £2, or 2, or 5, or so 10 points, yeah? Not code, right? Numbers. If this is how I buy the trade at 10 points in the practice account, I know that trade will probably do up to about 4. When I buy a certain, if you see my videos, you'll see I buy a certain trade, a certain option trade. Whether I go long or short on that trade depends on where it is at that particular time, and if I'm actually in a swing trade or day trade in the options trade, option call whether I buy or sell the trade. But when I was actually buying this trade in the late 2020s, when the tech stocks absolutely soared, yeah? Went off the scale. This particular trade was doing 450. At the end of the option, it was doing 450. It wouldn't go much past 400, 450, and that's in tech when tech stocks are soaring. So like now it's 228. So in 19 days, it's not going to go. If it goes to 300, it's got to stay there for 16 days. It won't. It will come down. It will go up. It will go down. It will go up. It will fluctuate. Right? And where it finishes in 16 days from now is where it will be. But it won't just go to 400 and just stay there for 16 days. It will take time getting up to there. If it goes up there, and it may adjust accordingly. Yeah. As people buy and they make the money, and then they sell the trade, which will affect the trade by lots of buys and sells within the trade. So I don't mind if it's gone 70 points against me. It could go 130 points. I could care less because I've pre-managed my risk before I took the trade to absorb the trade going against me. So I don't care what the trade does, and it's a trade I trade quite frequently. Like if you trade gold, you should know pretty much where gold prices are and what they should do. So I know pretty much where this trade is going to be, and it's mid-month, which is about where it should be anyway. So I may have to take the loss of the trade and then reassess it and then make money from there, and either choose to go long or short depending on where the trade is. But it's just the trade has parameters as where it is. It won't go much more. This trade won't go much more than 400, 450. And it'll have to go somewhere to actually do that. So it's probably 350, and it's at 220 now. So it's probably got 100 points to go again. So which I've got enough in me available to absorb pretty much that. Even though this trade has absorbed 50% of the balance pretty much, but I had still some more to actually for it to absorb. I hope this makes sense. So yeah, if you actually buying options.